Hello, Bear Bull traders. It's Peter D, and I wanted to share a different day with you today. If you saw my other recap, I shared a day where I was trading well, actually, and things were moving as I expected. Today was not one of those days. I did not trade well, and I actually hit my max loss. And a lot of it was preventable, so self-inflicted wounds. And I thought I'd share it because, frankly, if my mistakes can help you avoid them on your side, then maybe some good will come out of this day. Um, so, as you know, I do a summary, and one of the things I do is I assess my mental state before the day starts. I knew I was coming to the day tired. I was out late last night, and so I wasn't on the top of my game. So, because of that, I significantly reduced my targets. So, previously I was trading at $100 per risk, $300 target, and a $500 target, $300 stop loss. You can see I've reduced those significantly, and that was really to help me, sort of control my risk. But what I didn't do is take the time to mentally set that in my head and make sure that I didn't exceed those limits. Normally, I'm very disciplined. I follow my rules. That's why they're there, and I make sure I don't exceed them. Today, I exceeded them on numerous occasions, and that's because I hadn't really sort of spent the time to set these in my head to make sure that I didn't sort of blow the game, if you will, on this. Um, and I said I broke rules. I broke rules, I think, 8 different times over the course of the day. Six times, I broke my rules in the first 4 trades alone. And frankly, that's ridiculous. So I'm a little embarrassed, but I'm sharing this with you anyways. So let's look at the day and what I actually did. So MU was where I started the day, and as you can see, I took 5 trades on MU, and I took 11 trades over the course of the day, which was a lot for me. But the 5 trades on MU, I got to a point where I was just taking bad trades. So the first trade, we'll go through them one by one here, by the way. But the first trade, I was okay with the entry. So, it did the normal pull up. I was expecting it to pull back through VWAP and drop. We were already seeing signs that the market was going to be perhaps a red day in the market. So, I felt okay taking a short here. I put a 10-cent risk on it, which would put me right back above VWAP. Felt good. So, and I took 200 shares, which would give me my $20 stop loss. So that's fine. But what happened was 2 things. One, so it moved against me. That's fine. I should have exited right here, but I didn't. Now, occasionally, I allow myself to add to a trade if I'm not at the max for my trade, and I just see I'm in a pullback. So if it pulls back at or near my stop loss, then I'm allowed to add 50% more size. So in this case, I added 50% more size, which is why it was 300 shares. So I had 200 here, another 100 here, but I was already past my max stop loss. And then it continued to pull against me, and I was forced to exit at over 3 times my targeted loss per trade. That is ridiculous. That's just a complete breach of my rules and my discipline. And so that got me going. I took a deep breath, but you notice I kept going, right? So okay, so it went up, it came right back down. I said, okay, this time, look, it's breaking VWAP, we're good. I went short with another. In this case, I said I'm only shorting 100 shares, right? Okay, now it's going with me. I'm just going to short another 100 shares. And my stop loss was again above VWAP. It comes back to VWAP. So as I mentioned, sometimes I allow myself to add, but again, break the rules. I was already at my maximum size, but it was coming back down at least. I added another 100 shares. That's okay. But then it pulled against me. I should have exited right here, but I didn't. I let it go and said, oh, it'll come back, which it did, but not in time. And I forced myself out when it finally got to this moving average. So like that was just, again, poor discipline. A second time, then let's get worse, right? This trade was totally superfluous. I should not have taken this trade at all. So it rounded the top. I immediately re-entered like 2 minutes later. And on what? There's no technical indicator for this trade. Now, at least I reduced my size because I was a little skittish about these losses. And I reduced my size. And look at these losses, by the way, right? Here's $120. So if I had a $20 max loss per trade and $200 I was willing to lose in the day, I should have been able to take 10 trades before I get forced out of the market, right? Instead, I lost the equivalent of 12 trades worth in only 2 trades. Like that is unacceptable, completely unacceptable. So this one, where it drops down, and I'm just revenge trading now, right? I'm revenge trading down 100 shares. I said, oh, it's going to drop. I'll just get some of my money back. When it goes below VWAP, I'll add to the trade. And it pulled against me. And because I was half size at 100 shares, it pulled back up. It broke this moving average. And I was at my $10. I just said, I got to get out. So at least I held to my discipline on the exit on this one. But I should not have been in this trade to begin with. Now, then I'm watching it, and I justify the next trade. So look, here I'm down a significant amount of money. I'm seeing it drop the VWAP again. I'm looking and I say, okay, look at this, right? There's a channel forming. I've got lower highs. I've got lower lows. It looks like it's moving down on the 1 minute. I look at the 5 minute, right? Whoops, that's badly drawn, but you can see there's a channel there too. But channels aren't real indicators. I think that anything that I draw is not a real indicator because I can draw anything on a chart. I use them sometimes if you're using it to support other indicators. But in this case, what other indicators, right? I got this mess of moving averages that I'm sitting in here. I haven't even closed a 1 minute candle below the VWAP. I have a good risk reward, but frankly, this was a bad entry. It was a bad entry and I should have taken it. But because I was also nervous by all these previous losses, what happened is, I enter, it pulls back up above VWAP, I take a deep breath, it didn't quite hit my loss, my target, so I'm good, it drops back down, but again, not to the target I'm looking to get because I wanted at least 15 cents on it. I got just above 10 or 12, and it pulls back up and I'm like, crap, I'm out at break even, which ended up being like -$2. But, bad exit. So I shouldn't have been in this trade to begin with, but once I was, another one of my rules that I have is if you're in a trade and you've taken a partial, then you stop yourself at a break even. You don't let a green trade go red. Sometimes I let it move by a few cents if I'm willing to give back part of the win. That's okay. If I'm just in a pullback and it just happens to pull back to my entry because I didn't get the best entry. But if I haven't taken a partial yet, the original premise of the trade stands, which means I should have had my 10-cent risk and I should have let it ride up to this level, which case then I could have taken advantage of a drop and I could have gotten some money out of it. I mean, it did drop and I was looking for it to get to 45. Remember I said I was looking for 15 cents. That would be down here. It got there, but I'd already exited the trade. So another example of bad trade management. Now, this last one on MU follows a pattern for the afternoon, so let me come back to that later. Next is AMD. AMD, again, I'm not really happy with my decisions here. So, this was history. So I remembered the fact that I traded AMD really well over the last few days. I had some very successful trend reversals that I'd taken, and I was convinced that I was a master of trend reversals in AMD, I think. So, it's the only thing I can use to justify the fact that I took a trend reversal here when, does this look like a reversal? It doesn't really to me now. Obviously it did then, but a reversal would have to have broken the 9 and the 20. It did not. It would have to have shown some higher highs and higher lows. Where's that, right? It's not here. And looking at it now, I'm like, this looks like, right, a reverse ABCD or a bear flag. Like there's no indication that there's a reversal happening here at all. So bad entry. Then I get caught in a spike. Now, I do have a rule that says don't sell on a spike. I've been caught many times selling on spikes, and 90% of the time they move back. They move back to the point of entry, and then spikes, in fact, can sometimes signal a reversal, right? Because it'll spike down, come right back up, and you're good. In this case, it didn't happen, right? It spiked down. So what I did, and I like I told you before, I do allow myself to add at the bottom of a spike. So here I allowed myself to add at the bottom of the spike. I'm sort of okay with that because that reduces my break-even point to the midpoint of the spike. Even if it only came up halfway and it didn't show any signs, I could exit. So the risk reward on adding on a spike is okay to me, but but obviously it didn't happen in this case. It went down and I sold immediately. So again, I'm okay with that. While this was 2 times my max loss on a trade, I'm actually okay with that because I couldn't have prevented the spike. I mean, this happened in a matter of seconds. There was no way I could have really gotten out, and at least I followed my no selling on a spike rule. So, while I shouldn't have been in the trade to begin with, once I was in it, I managed it acceptably. This trade here, so what happened, I saw this V, so it was putting in a big V, and I missed this ABCD, so this would have been an opportunity because it would have been a good risk reward, right? I could have entered as soon as it broke this line. My risk would have been down here at this line, 10 cents, 200 shares. I could have entered here and then sold as it went up. But I was late. I chased it a little bit. I knew I was chasing it, so it was a scalp in my head, which I'm sort of okay with, which is why I sold fairly early. As soon as there was any sign of weakness, I sold, and then again when it was coming back to break even, I was so skittish after all the other losses that I sold, even though I only made $7, right? So, okay with that, in understanding the conditions under which I was trading, but overall, not really a great trade. As it turns out, as you can see, it went down anyways, so it's not like I missed I missed a great opportunity, but frankly that's neither here nor there. It's really about how I managed the trade and the information I had at the time. My last trade on AMD was a little bit later in the day. I put an insert here for a 1-minute chart. I was doing another trend reversal here. I'm sort of okay with this reversal. This time it put in a V pattern. I saw the V. It made sense to go long this one, but I hesitated, right? So again, when I get nervous, I have a bad habit of hesitating in trades. I missed one ABCD, I missed a second ABCD, and another one of my rules is you don't go on the third signal. So if I have 2 ABCDs, don't trade on the third. I didn't even wait for the third to set up, right? I just sort of went long here. I should have said, look, I'm chasing this. It's too late. In the pattern, I mean, look, it came all the way down this way. I sort of was thinking, all right, so it's going to match that, the actual V will be this size, so I've got opportunity back to where the VWAP now sits. And I understand what I was thinking at the time. In hindsight, was not a good decision. So when I entered, it went up a little bit, moved against me, and I got stopped out at my loss. It was spiking down here, so which is why I'm a little over the $20. Again, okay with the exit. I don't think I should have entered this trade to begin with. BABA. So going to mid-morning. Mid-morning is when I tend to look at the higher price stocks because I like the way they move generally a little bit better, and I'm always watching them anyways. They're often risky on the open, so I tend to focus on them a little bit more mid-morning. In this case, Bubba lost the VWAP. It had come back. It touched. It started to fall again. Really, again, I was hesitating on the entry here. I was nervous. So I was waiting. I really should have entered earlier on. Like up here would have been a much better place because my risk reward would have been to the VWAP. Here, what happened is I waited, and as you can see, it didn't cross the 20 moving average. So I said, okay, so this looks like a safe place, but it meant I had a full $1 risk. So which means I could only take 20 shares. So I took 20 shares, and I was looking, because I took a $1 risk, I needed at least $1 before I should have taken a partial. So what's this? Right? Like really, there is no excuse for this exit. I am disappointed with that. I think I was just nervous. It's only like 20 cents. Like that's a ridiculous place to exit half of my shares, frankly. So a couple minutes later, you see this big spike in here. Like that just happened in a fraction of a second. Don't know what it is, but that always makes me nervous in a trade when it's a spike just like that, because it signals there's things going on behind the scenes that I can't control. So I'm okay with this exit, and then it put in a little bit of a V, and I just said, look, if it comes back up to this point, I'm going to exit again, and it did. So I'm actually okay with these two, but frankly, this exit was very poor, and it's what gave me such low gains on this. And I was so nervous by this point because of all the stuff, the others that I'd lost. I was just sort of getting myself shaken out of things. Tesla, I was looking for a short on Tesla. Again, the day was down. It was clear. The SPY and the Qs were down. I was looking at this trend. It came up. I saw it bounce off the VWAP. I thought, okay, this is a false VWAP break. I said, surely once it puts in this top, it's going to go back down. But this was a bad entry. So what I did is I entered here. I had to put a $2 risk because I entered at 255 and 257. No, is that right? No, 256. And anyways, it was towards the top of this candle where was my risk. So $2 risk. So that means I only took 10 shares here. And I took, well, here you go. I actually can see it. It was just a 255. So I took 10 shares. It did go green for a minute as it pushed down, but I didn't get at least $1 out of it. So it pushed back up against me, and I got stopped out. It didn't work out. So I'm okay with that. Generally, what I'm not okay with is the entry. Again, I entered too early, right? Here's the 9. Here's the 20. Here's the VWAP. Well, if you really think it's a false breakout, wait for it to break back. Like, there's no excuse for entering early. I thought I was going to jump the gun. I was going to get a couple extra dollars out of the trade. Look what happens when you do that, right? Just a bad trade. While I managed it when I was in the trade, okay, I shouldn't have been in this trade to begin with. So next is Facebook. On Facebook, same thing, right? Markets were moving down. I was looking for shorts out in the marketplace. This one, I saw it playing around on the VWAP. This one I actually called really well. It barely broke or touched the VWAP here. It broke above and then played around. It was showing a little more downside strength, if you will, or weakness than was showing upside strength at this point. So when it came up and put in this rounded top, I said, okay, this looks good to me. So when it broke the VWAP, it broke the 9, it broke the 20, it broke the VWAP. Okay, I'm okay with that entry. So here's my entry, right? Good with that. But because I had to take a 40-cent risk, I could only take 50 shares, and that put my stop just above the VWAP here. So, it pulled back up, but didn't hit my stop. It pulled back down. I got nervous. I sold 25 shares, and then I immediately said, well, why'd I do that, right? It didn't hit my target. I should not have taken this partial. When it came back up and came up pretty much to my, where my stop loss was, I added back the 25 shares that I had sold. And then, it moved and spiked down. I sold another 25 here, and I'm okay with that because I actually moved up my cost average to 155.27. You can see marked here. That one was okay. This one was not okay, right? I should not have sold my final shares at this point. I should have given it a couple of cents. It didn't break the 20. I should have at least given it to the 20, and it had the VWAP as support. I could have even given it to that and just given back some of the profits here, because look, they're so minimal. Like, who cares, right? It doesn't really matter. But I was nervous. So as soon as my actual average cost was 27, it went to 28, went to 29, and I sold, and it was started to pull back right when I sold, and I got out right at 27. So but look at the move that I missed. Now, okay, so I can kick myself for missing the move, but I had another kick at the can. There was another opportunity right here. When it moved down and then it came back up and it tested this level but didn't break it, I should have shorted here. And that, I was watching it. I could have, but again, with everything that happened in the day, I got myself nervous and I didn't feel comfortable shorting it. But if I didn't want to short there, from a technical perspective, I should have shorted it when it got below the support level, just below 154.90, because it was clear that it was being supported there. Once that broke, I could have sold. I could have shorted right up here, and look at the move I could have taken advantage of. So, frankly, that's a shame, and that's bad trade management. Right near the Facebook one, let me go back up a couple of slides, and I'll show you the MU one that I was taking at the same time. This was, again, a short reversal. MU, right? It shorted me out. I'm like, should I do it again? Like, fifth time's the charm. But the strength had to end at some point. I figured it had come up through VWAP. It came up through the previous day's close. It put in this rounded top that I like to see on reversals. When it got to the bottom of this range, I took a short. I was sort of okay with that. My 20-cent risk put me to the top of these. It was actually just above these candles, actually. So I added some when I got up here. Again, I'm okay with that add. And because I was nervous about it, I sold some after it only had gone down like 10, 12 cents or something like that. 62, actually, maybe a little more than that. It's 20 cents. So I got 20 cents out of it, but But then I panicked. So what's these, right? Like I really should not have sold either one of these two. It went back to my break-even point, which you can see here is 42.62, but it didn't break it. I think 42.63 is what it peaked at, and then it went down. And look, I was only looking to get to previous day close, and look what I missed on, right? I missed on a full dollar move on MU, which is huge. I could have negated all my losses for the day if I had held on to that, or at least a significant portion of them. So between that and Facebook, I was looking at two trades I took and got shaken out of in short order, where I said, look, I could have at least broke even on the day. So, I was looking at some other trades that frankly I also should have taken, but because, I was just so shaken on everything, didn't take them. So, there you go. There's the dirty on my psychology for the day. Hopefully that helps all of you, and thanks for listening. Sorry for how long this was, and we'll talk to you again.